Okay. All good things come to those who wait. You have the bankers in the room. So first of all, I have to say the rest of you that are left are a resilient bunch of people. So first of all, thank you for being here. And we'll maybe throw some questions to the audience I see you nodding off. So I'm going to moderate the panel and the audience, if that's okay with all of you. Any nods? Any takers? Okay, so no questions to you. You're awake. Thank you very much. But first of all, thank you so much for staying. There's only this panel in the next one, so a little bit more resilience and you'll be okay. But I think it's important to discuss this topic at hand because we've spoken about a lot of things today. And now it's about making it real. It's talking about disruption. It's talking about this technology that everyone seems to know everything about. And today we're actually going to talk to people that are known as dinosaurs, people that aren't disruptive, and people that get a lot of criticism. So let's get to know the bankers in the room. So those who are also bankers in the room, I apologize in advance, but let's put them in the hot seat a little bit. It's about time that they deserve that license that they are issued, and that is the Holy Grail. So let's understand this a little bit more. So first of all, let me introduce myself. I'm Chantal Maritz. I'm a consultant, so I'm an independent, so I'm allowed to say a lot of things. Isn't that how it works when we're consultants? But I work in financial services and in payments, and I love seeing the transformation that is happening at the moment. But let's hear from the bankers. So first of all, let's start with Gideon. So Gideon, I know you've been on a lot of these panels, and a lot of them are maybe sometimes the same, but in your experience in the 20 years that you've been working in the industry, you've seen a lot of things happening, especially at the Crypto Fest one where you also spoke about stable coins. I'm sure you could have joined the panel. They had an open seat. You should have just come and sat down. But let's talk about it a little bit to get to know you a little bit. Tell us about the last thing you spoke about when you spoke that you said there isn't going to be one stable coin for the whole of Africa. What is your perspective on that? And then the audience can also get to know you a little bit.
Yeah, I think my view around it is probably not so much sort of a view around stable coins. I think it's sort of just the general context around currency. I don't think it makes sense to think that there will be a single currency that will service the whole of Africa. If you think about the fundamentals of why we have currencies, why different countries have currencies, there are very fundamental economic constructs that sort of make that a requirement, that makes it important for those things to exist. And I think in a continent like Africa, where there's so much disparity between current different countries and economies of different countries, it doesn't make sense that there's a single currency. Having a single currency effectively means that everybody across that continent will be paid with the same currency in terms of salaries, will reserve income in terms of exports and imports in the same currency. And if you have huge disparities in the economies of those countries, it just creates a whole lot of problems. So I don't believe that it's feasible. I don't believe that it's a viable option. I do like the idea that was spoken about earlier around finding ways where you have different currencies in different countries and finding ways how you can exchange a rand for a Nigerian naira through sort of channels of other currencies and sort of marketplace that sort of gets created sort of across different countries. So that is quite a new idea. I must say it's the first thing I heard, or the first time I heard about the construct today. And I think that's quite an interesting sort of concept. So I would really like to sort of explore more about that.
Definitely. And we're definitely going to dive a little bit deeper into some of the things you've raised. And I think also from a Nedbank perspective, you've explored a lot of things around how to open up the ecosystem, because it's about lowering the barriers and making it more inclusive, making it cheaper, and making it accessible. So let's talk about that a little bit. And I'm going to jump to this side, Harry. So let's go simpler, better, faster. Let's go to Standard Bank. Anyone pick up that tagline? Is everybody awake? So from your experience, I know you also bring 30 years of experience and you on many global panels, you serve a lot of different institutions, but I think from your perspective, you've recently published an article. So maybe if you can tell the audience a little bit about that article and what it actually means for inclusivity and innovation across Africa for financial services and particularly for banking.
Yeah, no, thanks. So first of all, very happy to be here and congratulations to the organizer, for 10 years of this conference going on. So great job done here. So yeah, as you said, I've been around to see the first transition of securities market when it moved from physical to electronic. And I think this is the second big disruption as far as securities markets is concerned by the DLT technologies and of course the whole digital asset. So my main view on that article was that I believe that as the mobile, brought the revolution on the banking side in terms of inclusion in Africa, where a number of countries just leapfrog from cash to the mobile banking. I think the tokenization has that potential on the capital market side. Because if you look at African capital market, we still have, they are very shallow, liquidity issue, not too much of listing. Most of the capital is still being raised by debt, either offshore by large companies or through financing. So from that perspective, that how do you bring more and more corporates to raise the money from capital market? And of course, then you need investors to come in. And that's where I thought the tokenization has that potential to revolutionize the African capital market from an inclusion perspective.
Well, that's fantastic. And you touch on some elements that we're going to delve into further. And I do think we must share the link so that everyone can read that article because it's a great article to delve into. And I think touching on that, I actually also just want to introduce Rikki so that Rikki, you can also, the audience can get to know you. You've also got extensive experience and I know you lead the charge from an F&B perspective. So you've also been in the trenches, leading the team, also getting scrutiny, because we know from a banking perspective, for those of you that understand the traditional way of doing things, and then you get these disruptive people that come in and challenge the status quo. But it's about that balance, looking at how you traditionally do business and how you bring in these new incumbents. So I think you've been very passionate about bridging these two worlds. So maybe share some pearls of wisdom from your perspective.
Yeah, I think scrutiny is the operative word there, and being called a dinosaur. If it's of any redemption, I was in insurance before I was in banking. But even before insurance, I started at a startup. So I think 3 years in that space, very dynamic, huge ambitions, big plans to change the world, and then did things in reverse compared to many others. But I think it gives you a degree of empathy, sympathy, insight, context to both sides of the equation. And what I like to bring is balance to the discussion, because often I meet people who have phenomenal ideas. And I think that there's some financial viability to it. However, to believe that it's a straight tech swap out can be a little bit naive at times, if you'll forgive the use of that word. So my job is to kind of meld the two, and to try and find some symbiosis and the synergies that can emerge from that. And yeah, I think it's got to be balanced.
Definitely. And I like the word balance. I like the merging. And I think that is what we need to talk about today, because you've got the safety and security that the financial sector brings and banking. Everyone thinks, I trust my bank accounts, until things go wrong. In times of crisis, then we trust them and everything's okay. But then when the bank fees are too high, or when this goes wrong, or when it takes too slow, I know if I have to go to a branch and I have to go prove proof of life or do something, believe me, the things I say, we cannot repeat at the conference. But the point is there's levels of frustration. But how do you bring these things together, and how does that innovation work with the stability and safety and security? So maybe, Gideon, if you want to tackle that, and let's start at the top.
I think something that I think is often not understood in the sort of context of blockchain and sort of the fintech environments, and I'm saying often, I think there are people that have come from banks and have created sort of fintech companies and created brilliant solutions in the context. But for a big part of the community, they don't really understand the role of regulations and the constructs behind it. If you think about what has happened, you have a global economy that has developed and evolved over hundreds of years, from barter systems to trading with each other in different ways, into sort of processes where money started being used for payments, and ultimately international sort of trading constructs that got created. And in that framework, as things sort of evolved, you got situations where certain countries that were better at doing certain things misused and abused other countries that were not as good in that sort of constructs. So you started getting frameworks created where there are rules that started developing and regulations that started being created around how one country tries to protect their own citizens, their own people, against this sort of global context. And that is where regulation started. So basically regulations is aimed at protecting the people within a juristic environment and making sure that that juristic environment can remain competitive in a global economic structure. And in the framework of that, if you start to understand the principles behind it and the way that banking systems have been created to try and connect that regulatory intent that is very much sort of driven by political context and sort of the leading structures in a country, connect that with the people and the actual users of the financial system and the people that actually want to interact with the economy and other people in that economy. These things have developed over many years. It's stuff that didn't sort of just happen overnight. And I think where we are at the moment is quite an interesting time. I think the context where blockchain and fintech companies are busy to challenge the limitations of the current sort of status quo, it's sort of channeling out new ways of doing things. It means that regulations are going to change. It means that things and the way that we are doing things are going to change. And it means that banks will have to adapt. I mean, I think one of the big reasons and big things that I think that one of the reasons why it's slow for banks to react is that regulators are very much depending on banks to ensure that on the ground, the actual day-to-day operations of how people use money and the actual transactions that are being conducted is done in a way that generally is in the good interest of the country. And because of that, there's a lot of focus being placed on banks to make sure that whatever they do is done in a way that the customer is protected, that the customer is safe in what they're doing. In the context, it means that from a banking perspective, if something goes wrong, there's always a place where a customer can go to go and find help, actually go and solve a problem. I think in a new blockchain world, sometimes that's a bit difficult. If things goes wrong, and if you sort of open the wallet on the internet, there's nobody you can phone to actually help you to solve your problem. You, in many cases, are left to your own devices. And I think that's the kind of challenges that we're trying to figure out. How do we sort of deal with this environment? How do we make this safe for people that don't understand the technology, that don't really understand crypto, that sort of get psyched up by the hype of crypto and sort of get involved in buying crypto without really understanding what the foundations behind it is. And I think as a bank, our responsibility is to start building infrastructure, building solutions where customers can effectively start operating in the traditional banking world as well as in the Web3 world almost seamlessly. And that less than 1% of the economy currently is exposed to blockchain or crypto. So we need to figure out how do we sort of make it possible for people to operate in both these worlds and get the benefit of both these worlds. Because the volume, the liquidity, all of that sits in the traditional space, not in the blockchain space. We need to figure out how to transition those things.
Mm-hmm. And I think the key things that you brought out there was it's the safety and stability that still needs to be there. Definitely. But there is still the emergence that is happening. But the disruption is happening across multiple levels within the bank. And I think that's an interesting topic because, and the scrutiny that Rikki was also talking and re-emphasized, I think that's important to note because it's not only on the technology level, it's on the regulatory frameworks, it's the business processes. And at the end of the day, it's about making it more efficient and effective to the customer at the end of the day. And maybe let's talk about this hybrid world then a little bit more and what that looks like. So, Harry, maybe if you want to comment on that, because it sounds fantastic if we get it right. But we have to look at how do we merge these two worlds? What are the advantages, disadvantages? How do you tackle it? What should we do and where should we start with this?
Yeah, no, it's a very interesting space this is. So I think we have moved from the, let's say, 6-7 years back when there was a huge hype that blockchain is the solution for it and is going to 100%. So we have definitely moved from that hype. But that doesn't mean the disruption is not there. Actually, sometimes it's a misnomer to think that traditional organizations have not responded. Sometimes it is responded in the traditional context itself. So let me give you some example. So in the traditional system, the three things always highlighted, where the challenges are: high cost, accessibility, and then the speed. So if you look at it on the payment side, number of countries have implemented, at least on the domestic front, instant payment systems. Mm-hmm. And that has happened in the last 6-7 years. You can virtually call it as a reaction to what was coming on the technologies. The largest capital market of US and the largest emerging market in India have gone to T+1. And one of them is talking about going to T+0, actually. Clearly, that is a reaction to what blockchain was promising in terms of instant settlement. So I think one set of reaction is to say that, okay, what is the issue? Let's solve the issue. Whether the traditional technology can solve it or do we need to bring in? Equally now, organizations are more finding specific problem and then addressing that. And that's where you find that in the banking industry, there's a lot more work on the tokenization side than on the crypto side. And the reason for that is quite clear because across the world, as we heard all day today, that the regulatory clarity is still a work in progress, right? And of course, being a regulated institution, you cannot really jump in unless you have 100% clarity in terms of what you can do, what you can't do, what are you responsible for. And as Gideon rightly highlighted, we carry the huge fiduciary responsibility as far as the customers are concerned. So on that front, if you again look at some of the examples of how people are solving the real thing. So some of the global banks who have launched their own stable coin, JP Morgan is an example and quite successful, so now you can do the intraday repo in US market, or you facilitating 24/7 US dollar payment within your own ecosystem. So you are solving that problem. Equally, I think some of the collaborative work which is going on in a number of jurisdictions, and South Africa and SAB is part of some of those projects globally as well. You see a greater partnership between the fintechs and the traditional organization. The cross-border payment still remains an area to focus on, and the people are still not happy with the cost as well as the time, although it is much better in the last 5-6 years. And I'm sure individually we have experienced that. If you look at on the tokenization side, the number of jurisdiction where people are already bringing some of the newer asset class onto the investors, that's already happening in terms of the bonds or in terms of other, which is again was a demand that, how do you bring more products to the investors? Even if areas like trade finance, you see there's some of the live experiments now happening where people are trying to streamline that how the trade can be financed and how you can make it more simpler. Identity is being looked at, which is very, very critical to really drive the adoption in the banking environment. So there are a lot of these, areas where the traditional banks are working. Like, for example, in Standard Bank, we rolled out our own solution for cross-border payment, more as a starting point, but it's working pretty well, just to trying out things. So, and you made a number of such examples I can give you. So the work is there on both sides. The traditional organizations are not sitting quiet. Mm-hmm. They are reacting in their own way. They are assessing on their own way. And of course, they have to play in a regulated framework. So I think benefits, we all know about it, right? It's about speed. It's about 24/7. It's about cost, but there are challenges as well. Yes, and challenges definitely. Equally in terms of, I think the regulatory clarity remains the number one challenges. Technology, to some extent, it remains. Not from the perspective of how do you solve this specific solution, but how do we bring existing and new together? Because it's not like you're replacing one with the other. Both will continue, and so we have to find a nice way to integrate things to ensure that the client experience remains the seamless. So there are challenges on both sides. I think the whole capacity building is also a big challenge. Do we have enough talent? Do we have enough, skills available to really go on a big scale? I think from an Africa perspective, I would say even that is quite of a challenge. Adoption is a factor of if people will find value, they'll go for it. I think when the mobile banking started, people say, oh, how can that be successful in a region where people have no exposure to technology, internet is not there, all of these things people talk about. Guess what? 15 years' time, Africa is a trendsetter as far as the mobile banking is concerned, and far ahead of the developed market. So those are the challenges which needs to be tackled. So I think, it's in my view, this hybrid model is not really the right word, but I think the traditional organization is really now picking up the speed and finding the right balance between where the technology can be used the maximum benefit and where the existing solutions are good enough to continue.
And you brought some brilliant elements which we want to actually take the conversation to, because it's about making it real. A lot of people have felt that it's always been the bank's club. And now you need to let other people into the party. And with this disruptive technology, that's how you almost get a way in. Because this is what customers want. Customers want things done differently, and technology is almost that gap in. So we've spoken about really fantastic things, and you brought in some pros and cons and some enabling factors that we need to consider, but it still is taking a while. So how do we really make it real? And I think that is the question a lot of people in the room want answered. And how do we speed up the banks, or what do we do? So I don't know, that $1 million question. So since you are studying your master's at the moment, maybe you have the answer for us, Rikki. No pressure.
I can venture an answer. I think in the question we refer to laying the foundation. And I think that we've made really good headway at laying foundations. Mm-hmm. Foundations don't necessarily result or manifest in immediate product releases. And so there's a lot of work that's happening behind the scenes. I think it's critical to recognize that again, when we speak about financial systems, we're not speaking about a tech solution. These are webs of complex webs that come together across regulatory, technology, social ecosystems to deliver a product. So certainly as a representative of First Rand and as a spokesperson on behalf of some of the other banks who we work in consortiums with, we're all working to put in place the piping required of a new financial system. And it's not an exclusive one. I would guard against characterizing banks as the gatekeepers for fintechs to participate in the system. We certainly, as my brethren here today and the people that I deal with, recognize that it needs to be a collaborative approach. There's just too much in the offing from a blockchain-based fintech environment to exclude them. And I think we would do that to our own detriment. So a lot of what we do is try and reimagine public goods, financial market infrastructure, and recognize that we need to collaborate on building new rails, but then with the clear expectation of one another that collaboration ends at a certain point and that we become competitive about that. So fix the rails, make sure that those rails are appropriate and future-proofed and the like, and encompassing of the kinds of benefits that blockchain can offer you. Things like removing geographic and temporal limits on transactional activity. That borderless thing is nothing to scoff at. The fact that you can have 24/7 operation. It's like, I can read you the textbook examples, but we should make it real. Smart contracts allow coordination between entities that don't have to trust one another, right? And all of these things require wide-scale adoption to be successful, to usurp the existing systems, or to evolve the existing systems, update them, and keep them current and beneficial to the users thereof. So I've gone a little off script, but I mean, all of this requires not only the capacity building in terms of technical it requires new skills, the acquisition of new tools, rule books that manage the engagement between entities and how schemes might exist, the setting of standards. Those are very useful, but blockchain itself it's not a panacea for everything. It's not going to solve every challenge that we have, but it is up to us to collaborate and find those areas, the white spaces that can be addressed, and then allow the collaboration and at the same time the balance of the ability to compete. But it does require integration. Often, those blockchain systems will not operate in isolation. There will be backends, there will be complementary systems that require off-chain, plugins. And then, I think ultimately when you are building these sorts of systems, it's the network effects that will win out at the end of the day. It's the interoperability that will win out at the end of the day. And to have the combination of both a plethora of different types of cash that are fit for purpose, but enough assets that could be pledged and used as a basis for commerce on there. So that unified ledger is certainly something to strive for and something we should all be putting our efforts towards.
Definitely. And I think in that response, we could have 3, 4, 5 panels just on that discussion, but I know Chipo won't allow me to. But I think the key thing that you heard, though, is that this can't be done alone. It's an ecosystem effect. And just think of the countries that have harnessed it, because it needs to be business-led, technology enabled. You need to solve a business problem because then the technology does its work. And there are lots of problems that you need to solve. And ultimately, if you look at the countries that leverage the technology, they haven't solved all the problems and they haven't harnessed technology completely, but they impact GDP. There's actual GDP growth. And I think that's something in South Africa in Africa that we really do need. And if we can improve the lives of citizens, it improves the quality of our lives. And I think it's a feel-good feeling when you go to bed at night. So first of all, I just want to say thank you to the gentlemen on the panel. I have lots more questions for you, but time won't allow us. But I want to put it out to the audience. They have volunteered that they want to partner with you as banks. So please find them after the conference today at the networking event. They will go through the scrutiny internally within their own banks. But please, we need to partner. This is about the ecosystem working together. Thanks for your time, and thanks to our panel.
Thanks, everybody.
Thank you. Thank you.